Imagine waking up tomorrow to find that the price of your home has doubled overnight. While this scenario might sound like a dream come true, it's closer to reality than you think in today's 2024 housing market. This essay will delve into the soaring skyscrapers of property prices, dissecting the undercurrents and the ripple effects on society. What is driving these exorbitant price tags? Are we in a bubble that's about to burst? Let's explore. In 2024, the housing market isn't just climbing, it's on a vertical launch pad. Recent statistics show a staggering 20% increase in average home prices across major cities compared to last year. This unprecedented rise has economists and potential buyers alike gasping for air, trying to keep pace with the market's frantic heartbeat. The escalation isn't uniform, though. While some areas witness moderate increases, others are seeing their property values skyrocket to the point where even well-off buyers are priced out. This disparity highlights the uneven heating of the housing furnace, which is forging a new landscape of urban residential economics. Historical data is essential here. Just 5 years ago, the average price increase hovered around 3 to 5% annually. The jump to today's figures marks a seismic shift, setting off alarms about sustainability and the potential for a sharp correction. What's fueling this fiery ascent in housing prices? First, interest rates are at historic lows, making borrowing cheap and easy. This has opened the floodgates for both first-time buyers and seasoned investors to access capital at minimal costs. However, low rates are only one piece of the puzzle. Another critical factor is the stark mismatch between supply and demand. New housing developments are not keeping pace with the surge in demand, creating a bottleneck that inflates prices. Urban migration, changing demographics, and a rebound in economic activity post-pandemic have all intensified this demand. Experts also point to increased material costs and labor shortages, further straining the ability to expand housing stock. These elements combine to create a perfect storm, pushing prices upward and testing the market's limits. Certain regions are feeling the heat more than others. Cities like San Francisco, Toronto, and London are witnessing some of the highest jumps in real estate prices. In San Francisco, the average home price has surged by over 30% this year alone. Stark contrast to more stable increments seen in past years. Statistically, these hotspots share common traits: high job growth, burgeoning tech industries, and limited new housing developments. The influx of high-income professionals competing for limited housing, stock drives prices up, setting these cities apart from their slower-growing counterparts. Speculation plays a significant role in the current market dynamics. Many buyers are purchasing properties with the expectation of continued price increases, rather than basing their decisions on fundamental value. This speculative buying adds fuel to the fire, creating a self-reinforcing cycle of price increases. Real estate has become a favored play field for speculators who flip homes for quick profits. This behavior not only inflates prices, but also limits the availability of affordable housing for genuine buyers, distorting the market and increasing volatility. response to the frenzied market, governments at various levels are stepping in with policies aimed at cooling down the heat. Measures include higher interest rates, stricter lending criteria, and taxes on foreign buyers and speculative purchases. Some of these interventions have had mixed results. For instance, the introduction of a foreign buyer's tax in Vancouver initially slowed the market, but prices soon resumed their upward trajectory. Public reception varies, with some applauding the efforts to stabilize the market, while others criticize them for not addressing the root causes of the housing crisis. Long-term effectiveness of these policies remains to be seen, with critics arguing that without increasing the housing supply, other measures might only offer temporary relief. Builders and developers are also reacting to the market conditions. Although there's a rush to capitalize on high prices, several hurdles hamper rapid development. These include zoning regulations, community pushback against new developments, and skyrocketing costs for materials and labor. Despite these challenges, some areas are seeing innovative building practices, including modular homes and green buildings, which promise quicker and more cost-effective solutions to the housing shortage. However, the scale of these solutions is still too small to meet the soaring demand. Predicting the future of such a volatile market is tricky, but experts are weighing in with their forecasts. Some predict a cooling off as interest rates continue to climb, which could slow down the borrowing frenzy. Others foresee a more dramatic correction, potentially a crash if speculative investments suddenly reverse. There's also a chance that new technology or changes in government policy could stabilize or even lower prices. For instance, significant advancements in construction technology could reduce building costs, passing savings on to buyers. The current market is particularly tough on first-time buyers. The high entry costs and fierce competition for affordable homes are formidable barriers. Stories abound of individuals and families who have had to revise their expectations drastically or delay buying indefinitely. One such story is of Emma and Joe, a young couple in Seattle, who have been outbid on 5 houses despite offering above asking price. Their frustration is palpable and reflects a common sentiment among many aspiring homeowners today. Investors are playing a more significant role in the housing market than ever before. With the potential for high returns, real estate has attracted both domestic and international investors, further driving up prices. The activity is not just limited to buying and selling. Many investors are turning to the rental market, where the demand remains high, ensuring steady income. This shift has implications for the market's dynamics, contributing to the rapid price escalation. As house prices soar, so do rents, impacting millions who cannot afford to buy. In cities like New York and London, renters spend an average of 50% of their income on housing, a figure that highlights the broader affordability crisis. Renters face not only rising costs, but also increasing insecurity, with eviction rates ticking upward as landlords seek to capitalize on the booming market. This creates a precarious situation for many, particularly lower income families and individuals. Technology is starting to make its mark on the real estate sector. Innovations like virtual property tours, blockchain for secure transactions, and AI in property management are changing how properties are bought, sold, and managed. These technologies could lead to more transparent and efficient markets, potentially lowering costs and making the buying process smoother and more accessible. The housing market boom has significant social implications. The stark divide between those who can afford to buy and those who cannot is widening, leading to increased social stratification and economic inequality. Communities are also changing, with gentrification displacing long-standing residents to make way for wealthier newcomers. This reshaping can lead to a loss of community identity and cohesion, raising concerns about the long-term social fabric of neighborhoods. Looking back, the housing market has experienced booms and busts, but the scale of the current boom is unprecedented. Comparisons with past markets show a lack of corrective mechanisms today, such as sufficient housing supply and affordability strategies. Lessons from previous cycles, like the importance of regulatory oversight and the risks of speculative bubbles, appear to be overlooked in the current frenzy. Understanding these historical patterns is crucial for predicting future movements and preparing for potential downturns. The 2024 housing market is a complex and dynamic arena, reflecting broader economic, social, and technological trends. While the current boom offers opportunities, it also presents significant challenges and risks, especially for those struggling to keep up with escalating costs. Future prospects will depend on a variety of factors, including economic policies, market innovations, and social movements. For now, the market continues to run hot, and all stakeholders, buyers, sellers, investors, and policymakers, must navigate this volatility with caution and awareness. As we look to the future, it's clear that addressing the housing affordability crisis will require innovative solutions, robust policy interventions, and a commitment to fairness and sustainability in housing markets around the world.